Imagine this. You just drove off the dealership lot in your shiny new car. You're feeling great. Until the lender throws in an extra charge, car loan insurance. You pause. Wait, what is that? Do you really need it? Or are you just being tricked into spending more? What if skipping it costs you thousands later? Stick with me, because by the end of this video, you'll know exactly whether car loan insurance is worth your money or a waste of it. Number 1. What exactly is car loan insurance? Car loan insurance sounds confusing, but it's simple once you break it down. It's an optional insurance product that protects your loan, not your car. That means if something happens to you and you can't make payments, the insurance steps in and covers it. There are 3 main types. First is gap insurance, guaranteed asset protection. If your car gets totaled or stolen and your regular insurance only pays for the car's market value, gap covers the gap between what you owe and what your car is worth. Second is credit life insurance. If you pass away before paying off the loan, it pays the remaining balance so your family isn't stuck with debt. Third is credit disability insurance. If you become disabled and can't work, it pays your monthly car loan until you recover. So, it's not about protecting the car, it's about protecting the loan. Number 2. Do you even need it? Now here's the real question. Should you get car loan insurance? Well, it depends. Let's take gap insurance first. If you put down a small down payment, like less than 20%, and your car loses value quickly, which most do, you're at risk of being underwater on your loan. Imagine you owe $25,000 on your car, but it's only worth $20,000 after a year. If you total it, your regular insurance pays $20,000, and you still owe $5,000 out of pocket. Gap insurance covers that $5,000. That's huge. But if you made a large down payment or your car holds value well, gap insurance might not be necessary. As for credit life or disability insurance, it really depends on your personal situation. If you don't have a financial backup plan, like emergency savings or life insurance, these policies could provide peace of mind. But if you already have other coverage or savings to fall back on, you may not need the extra protection. Number 3. Real life example. When it saves you thousands. Let's talk about Jamie. Jamie buys a brand new SUV for $35,000 with only $1,000 down. 6 months later, a drunk driver runs a red light and totals Jamie's car. The insurance company says the car's current value is $28,000. But Jamie still owes $34,000 on the loan. That leaves a $6,000 gap. Luckily, Jamie had gap insurance. That small policy saved Jamie from paying $6,000 out of pocket for a car that no longer exists. Without it, Jamie would still be making payments on a pile of metal. Number 4. But here's where people waste money. Some dealers push car loan insurance hard, especially Gap, without explaining when it's actually needed. They wrap it into your financing, which means you're paying interest on the insurance itself. Over a 5-year loan, that small fee can turn into a big expense. And here's the catch. You might already have similar coverage somewhere else. Some auto insurance policies already include Gap. Some employers offer disability insurance as a benefit. And if you have life insurance, credit life might be redundant. So before saying yes, ask, do I already have coverage for this? Number 5. How much does it actually cost? Let's talk numbers. Gap insurance usually costs between $200 to $700 as a one-time payment if you buy it up front. If it's rolled into your loan, you might end up paying more in interest. Credit life or disability insurance usually costs around $1 to $2 per $100 of your loan balance each year. That means for a $25,000 loan, you might pay around $250 to $500 a year. Over a 5-year loan, that adds up to over $1,000. So yes, it can protect you, but it's not free. You've got to weigh the value against the cost. Number 6. How to buy it the smart way. If you decide you do want coverage, don't just take the first offer. Dealerships often mark up prices. Instead, shop around. You can often get Gap insurance cheaper through your auto insurance company or even your credit union. And you don't have to buy it the same day you buy the car. Take a day, research, compare, decide. Same goes for credit life or disability policies. Check with your regular insurance provider. You may get a better rate. Number 7. What if you regret buying it? Here's something most people don't know. You can cancel. If you bought Gap insurance and realize you don't need it, you can often cancel and get a partial refund. especially if you haven't used it yet. Same with credit life or disability insurance. Call the provider, ask about cancellation terms. And if you're refinancing your car loan, make sure to check if any of these policies are being re-added. Sometimes lenders sneak them back in. Number 8. When you might want to say yes. Let's be real. Sometimes life hits you sideways. Maybe you're the only breadwinner in your household. Maybe you don't have enough savings yet. Or you just started a new job and don't have benefits like disability coverage. In those cases, car loan insurance can be a safety net. Think of it like a seatbelt. You hope you never need it. But when you do, it's a lifesaver. Number 9. When you should probably say no, but let's not sugarcoat it. If you've got solid savings, a stable income, a reliable car, or you're buying used and putting down a big chunk, you may not need the extra insurance. A 10-year-old used car with a $6,000 loan. The gap risk is low. The value won't drop much. If you have life and disability coverage through your job or personal policies, credit insurance may just duplicate coverage you already have. So don't pay twice for the same thing. Number 10. A secret most dealers don't tell you. Here's something juicy. Many dealerships make more on selling you car loan insurance than they do on the car itself. That's why they push it so hard. They might present it like it's required. It's not. Or they'll say everyone gets it. Not true. You have every right to say no. Thank you. You also have the right to ask them to show you the cost outside of your financing. Don't be afraid to walk away or ask for the paperwork. So you can think about it. You're the one paying, not them. Number 11. The emotional trap that gets people. You just made a huge purchase. Your heart's racing. You're excited. Then someone says, "What happens to your family if something happens to you?" Boom. Guilt trip. Suddenly, saying no to insurance feels like you're putting your family in danger. But slow down. Take emotion out. Look at the facts. Do you already have coverage? What's your savings like? What's your real risk? Make a smart choice, not an emotional one. Number 12. A quick decision checklist. Still unsure? Ask yourself, do I owe more than my car is worth? Gap might help. Do I have life or disability insurance already? Do I have savings to cover my car loan if something happens? Am I getting pressured to buy right now? Can I get this coverage cheaper elsewhere? If you answered yes to most, maybe hold off. If you said no and feel exposed, it might be worth considering. Number 13. How long does coverage last? Car loan insurance coverage usually matches the length of your loan. If you have a 5-year loan, the insurance typically covers that entire period, but not all policies are the same. Some may expire sooner or have conditions that end the coverage early. For example, credit disability insurance might only cover payments for 12 or 24 months, not the full loan term. So always read the fine print. Make sure you know how long you're covered and under what conditions. That way, you're not caught off guard when you need it most. Number 14. How claims actually work. Let's say you have credit disability insurance and you suddenly can't work due to an injury. You can't just stop making payments. You'll need to file a claim, provide documentation, usually medical records, and wait for approval. This process can take time. In the meantime, you still have to pay your loan, so it's not instant protection. And if your claim is denied, you're still on the hook. Make sure you understand what documentation is required before you ever need to use it. Number 15. Beware of duplicate coverage. One of the biggest mistakes people make is stacking coverage they don't need. For example, you buy gap insurance from the dealer. Then, you later realize your auto insurance policy already includes it. Now you're paying for it twice, and one won't refund you. The same happens with disability coverage if your employer already gives you short-term or long-term disability benefits. Paying for credit disability insurance might be unnecessary. So before you sign anything, take 5 minutes to check what you already have. A quick phone call to your HR department or insurance provider can save you hundreds. Number 16. The cancellation trap. Some lenders or dealers make it sound like once you sign, you're locked in. That's not true. Most states have what's called a free look period, usually 30 days, where you can cancel for a full refund. Even after that, you can often cancel anytime and get a partial refund based on how much coverage you've used. But here's the trap. Some companies bury this information deep in the contract, so you might not even realize you can cancel. Always ask up front, can I cancel this? How much will I get back? If they hesitate or avoid the question, that's a red flag. Number 17. It doesn't affect your credit score. Here's some good news. Buying or skipping car loan insurance has no impact on your credit score. It's not reported to the credit bureaus. And if the insurance pays off your loan in case of death or disability, your credit actually looks clean. No missed payments, no defaults. But if you decline the insurance and miss payments due to a hardship, that will affect your credit. So, while the insurance doesn't help your score, it can protect it indirectly by avoiding late payments. Number 18. It's not required by law. Some dealerships word things very carefully. They'll say things like, it's required to protect your loan, or it's part of the financing package. This makes buyers think it's legally required. It's not. Car loan insurance is optional. In every state, no lender or dealership can force you to buy it. If anyone says otherwise, ask them to show you where it's written. Spoiler, they won't be able to. Number 19. Should you pay upfront or monthly? If you choose to get car loan insurance, you'll often have two payment options. You can either pay it upfront in one lump sum, or you can roll it into your monthly loan payments. Upfront is cheaper. Why? Because when you roll it in, you're also paying interest on it. For years, let's say gap insurance costs $400. Rolled into a 5-year loan at 6% interest, you could end up paying closer to $480. If you can afford it, pay upfront. If not, ask if they'll bill you separately. That way you avoid loan interest on the insurance itself. Number 20. What about used cars? Used cars lose value slower than new ones. So if you're financing a used car, especially one a few years old, gap insurance might not be as necessary. That said, if you're buying a used car at an inflated price, which happens often with low supply, you might still end up owing more than it's worth. Also, some lenders won't offer credit life or disability coverage for used car loans at all. So ask, is this available for used cars? Is it still worth it? Used doesn't always mean safe, but it usually means less depreciation risk. You don't want to pay for something you'll never use, but you also don't want to skip it and regret it later. Now you know the difference. You know the tricks dealers use. You know how to spot the pressure tactics. You know when it's smart to say yes and when to walk away. So tell me, have you ever been offered car loan insurance? Did you take it? Did it help you? Or do you wish you skipped it? Let me know in the comments. I'd love to hear your story.